Thank you very much, Kathy. Well, as you know, South Africa's economy expanded at a slower rate in the first quarter of this year compared with the 3 previous quarters of 2020. The mining and financial services sectors were the biggest contributors to the 1.1% increase. To help us make sense of these numbers, we are joined by South African Chamber of Commerce and Industry CEO, Alan Mukoki. Mr. Mukoki, thank you very much for joining us. There's been a lot of relief, a sigh of relief in the market today with regards to these numbers being seen as better than expected. Do you share the same view as the South African Chamber of Commerce and Industry?
Well, I think that it's a yes and no. I think that in the short term, yes, it's good to see an uptick in the economy. But I think that in the medium to long term, we do need to drill down and deal with the big issues that face South Africa. Unemployment is very high. Youth unemployment in particular is exceedingly high and unsustainable, especially if you take into account the whole concept of whether the democracy dividend is actually flowing through to the people that it ought to flow through. You know, South Africa is a very youthful state. A huge majority of people in this particular country are people below the age of 35. And so if you are not showing cause that they themselves are part of the system, they can benefit in realizing this democracy dividend, then we may actually well burn the place down. So I think that we do need to get into the structural reform areas so that we can grow the economy, so that we can create the jobs that we need to do, so the tough decisions that need to be taken. We cannot continue to measure the economy on the basis of how the stock market is doing, on the basis of where the gold price is supposed to be, on the basis of how rich people are doing. How you measure the economy is how those issues that are raised in the United Nations Sustainable Development Goals are actually being dealt with. And those things include the end to poverty, zero hunger, making sure that you resolve the issues around gender equality, bringing those aspects in innovation, industrialization and development, making sure people have got cheap and affordable access to water and energy. Those are the big issues that we all need to focus ourselves on developing so that we can create South Africa that is actually a South Africa for everyone else.
We've seen how what load shedding is doing to the economy. We've seen what COVID-19, the pandemic, has done to the economy. But you and I have spoken many times on this particular platform, and you have actually placed the buck mostly at the door of government to come up with those structural reforms. When you look at the sectors that have contributed the most when it comes to this first quarter, that is mining and finance, these are not labor absorptive sectors. Where do you stop? Where does the buck stop really for you as the South African Chamber of Commerce and Industry?
Primarily, of course, we've always maintained the view that the buck stops with the policy formulation environment, so where the government creates the right type of policies, because that's where it all boils down to. So, number one, you need to fix the issue of education, because without the necessary competencies and skills, there is no way in which South Africa can industrialize, number one. And number two, industrializing when you have the capacity and capability to create those kinds of skills and competences that the very same people who are actually in manufacturing or industrialization or minerals beneficiation, they themselves are actually a market. South Africa is deluding itself in assuming that it can build an economy that is based largely on creating products that we dig up from the ground, whether by way of plants or by way of minerals, and then we actually sell it overseas. And then from time to time, we hope and pray that perhaps the dollar-rand exchange rate will be favorable to South Africa to our exports so that we can actually make money. I think that is a pipe dream. We need to get back to the basics. We need to change the policy around how are we going to empower the millions of South Africans that are outside of the economic system to have skills and competencies, and make sure that the minerals that we're actually digging out of the ground can actually be beneficiated, that we can actually build the industry that we need to be able to build, so that we can substitute a lot of the imports that we're actually importing into South Africa that are not even necessary, so that we can create a processing environment around our agri-products, so that we can build and develop the region and the rest of the continent. It's another pipe dream for South African businesses themselves to believe that they can create a sustainable, economically developing country by ignoring the rest of Africa. It is South Africa itself who should be deploying its own capital, its resources, its management capabilities, its technology, its engineering experience that it has developed over the years in the rest of the region as well as the African continent, so that that 1.3 billion worth of a market that exists in the rest of Africa becomes a market play for South African industry. So this issue of leadership, it touches both government as well as business. Even us in business, sometimes we create the impression that the problem is only with government. Yes, from a policy point of view, you'd like to make that argument. But the other argument that needs to be made is that do we have the right level of capability in respect of the leadership cohort that exists in the private sector? Or do we only have people who are only interested in the next quarter's ratio in terms of the financial ratio we're going to make the ROE, but they themselves are not necessarily concerned about the problems down the road in Alexander, which is just across from the Johannesburg Stock Exchange. So until we develop the level of leadership, even in the private sector, that worries itself about are there going to be competencies and skills in Alexander, because that is my future market, or in Kwamashu, in Devon, or in Tembisa, in Ekurhuleni, then we're only hiding next to nothing. So this is a conversation that is now urgent, that has become an emergent conversation that we all need to have, to look inside as leaders in South Africa to say, are we actually up to the task that is in front of us to create this place and make it very successful?
Mr. Alan Mukoki, the CEO there of the South African Chamber of Commerce and Industry, telling us his views about the first quarter GDP numbers that came out earlier today. We are now joined by economist and founding director at Nonsense, Pai, and former Statistician-general Dr. Pali Lehohla, to talk more about these numbers that actually came out. Thank you very much, Dr. Pali Lehohla, for joining us. Your take on these numbers. You sat on that very hot chair as a former statistician-general, and you have had, I know you have an affinity to the education part of what we do when it comes to unemployment, and when it comes to making sure that we give the right skills to young people to find the jobs. Your take on the first quarter GDP numbers?
Well, I think we need a bit of context for the numbers and ask ourselves, are the plans adequate to take us through not only this year but past this year? Obviously, the numbers are still very deplorable. Of course, we are still in a partial lockdown, so we wouldn't have expected a lot coming out of this. But compounding this are historical problems such as electricity. Probably if we had performed better on electricity, these numbers would have been better. Again, I mean, if you look at the level of imports is very high, and there's been a recent report released by BUSA and the LSA, driven by Intellidex, where the import substitution is supposed to be at about 20% towards 2030. The question is, how are we going to deal with that, given where we are now and where we will be next year, because these numbers are not very encouraging. We are moving from a very low base. The first quarter this year is much lower than the first quarter last year. It's much lower than the first quarter of 2016. So we are actually in a very serious problem as we move forward. Fixed capital formation expenditure is also very, very low. In fact, when you look at that side of the GDP expenditure side, we still show very low results. The main driver in terms of the expenditure side is household expenditure that seems to be driving the economy. So there are serious problems and worrying signs as we look at this number.
Dr. Lehohla,
in the context of the levels of unemployment, we have a serious problem, yes.
Dr. Lehohla, where are the bottlenecks when it comes to what needs to be done? We've been talking about structural reforms. As a former SG, where are we going wrong when it comes to the private sector, the public sector, and of course, those in civil society?
Well, I mean, the whole issue is really when you look at model estimates by the Treasury and the President, himself for the following years. It's a very pithy growth of less than 3% or 3.2%, which will not answer the questions of South Africa. So even if we do those structural reforms, they are not going to create any jobs. So we need to change course. And in model estimates that we did, it looks like there are possibilities to get out of this, including what business was saying that we have this program that we are working at as the Business for South Africa, and they estimated that the economy could grow at 6%, but government have ignored the private sector. Not because they have actually interrogated what the private sector was saying, just because they don't have the capacity to even engage the private sector on the suggestions that they are making. At least in the first instance, how are you going to make this growth reach that? Because I think that the Business for South Africa was coming with some good ideas about going forward. However, the Business for South Africa estimates were not modeled, so there are some problems there. But I think at the very least, government should have listened to business and say, how do we get these numbers that you suggest we can get, which is reducing unemployment by 2030 to about 15% and growing the economy of South Africa to about 8 trillion by 2030. The modeled estimates suggest similar to business, but government has put their elbows in their ears. And what they are afraid of doing is to tackle the macroeconomy, because it is on the basis of tackling that macroeconomy, relaxing that to almost the time of Asgiza, that growth and employment can actually make the big push forward. So structural reforms, yes. Of course, ESCOM shouldn't be where it is. Yes, of course, a spectrum should have been long released. All those things are things that are non-factors in terms of if we are managing ourselves best. They have to be fixed, of course, but they are not the only things that have to be fixed. We've got to deal with the macro. We cannot be sold the story of a debt to GDP ratio. I mean, what do we get for reducing debt to GDP ratio and holding it at 90%? What we get in return is a 53% growth, and the levels of unemployment will still be at 30% by 2030. So it is tackling the macro and tackling all these social policies and everything together that we can turn the ship around. But government is putting its elbows in its ears.
Dr. Pali Lehohla, thank you very much for your time, sir. That was Dr. Pali Lehohla, the former Statistician-general at Statistics South Africa, saying that business and government must come together in order to solve the macroeconomic problems that are there in the country.